Welcome to Money Talks. I'm Genevieve Westcott with the latest financial news from the countryside here at home and the continents around the world. In this edition, the state of the global fertilizer industry, the latest word from the international heavyweights who've been meeting in Montreal, Canada. What's it going to cost our farmers and how soon? Russia gives the green light to flood world markets with 20 million tons of grain after months of a self-imposed ban because of droughts. Just the latest example of how changing weather patterns around the globe are playing havoc with the price of commodities. And Fonterra's bumper payout forecast. Dairy farmers are on a roll with great news for the new season. All this and much, much more coming up. Joining us now to tell us more, beginning with our incredibly strong Kiwi dollar, truly a superstar this past week, is ASB rural economist James Shortall. James, what do you make of that dollar?
Oh, it keeps on climbing, and with the last 2 days we've hit brand new highs, post-float highs, currently trading around 82.5 against the US dollar. So extremely high levels and could push higher. Now,
what's behind it, do you think? It's not just simply the case of the US dollar being weak, is it?
Well, that's definitely a big factor, but we've had a run of really exceptional, outlook data, I guess, over the past week, particularly for the New Zealand economy. So there's been a bit of a roundup of positiveness. Yesterday, on Monday, when the dollar first traded high, there was the trade surplus data, which really built up the story that commodities and export commodities are doing really well. So that was the first tick in the box. The second one on Tuesday was the business confidence survey, which was probably a bit more of an impetus that we could see a bit more going on for the New Zealand economy down the track. So there's been a couple of things, and then when you talk about the Fonterra payout announcement last week,
of course, and Chinese investment, talk of Chinese investment as well.
That's right. I mean, there's been a groundswell of different bits of pieces that have really boosted the Kiwi dollar up.
Let me ask you, how high do you think the Kiwi dollar is going to move now, and how quickly?
Well, I'm probably not going to make too many friends with farmers by making some of these comments, unfortunately, but I think the Kiwi dollar is going to rise higher. We've been picking it could lift to 85 cents against the US, and it may even lift higher than that.
I've heard some economists from other banks talking about 86 quite openly. What's holding you back?
Well, we've probably taken a bit more of a, there's no reason, to be honest, why it couldn't rise to 86, 87, probably over the next couple of months, and 85's sort of a round number, but there's no reason why it couldn't lift even higher. Unfortunately, we also think there's been quite a structural shift in the dollar over the past sort of 2 years, and that's going to mean that our average levels for the Kiwi dollar is going to be much, much higher in the coming 20 years. Potentially, we're going to sit around the 75 cent mark as opposed to, say, 57, which we were previously.
So we just got to get used to it. Kind of like oil prices, although they've come back a little bit.
Well, that's right. I mean, we can't. I think the days of having high commodity prices. Generally, if we're going to have high commodity prices, we're going to have a high New Zealand dollar, and we're going to probably become less focused on the US economy, and the things that are really going to drive us are the developing economies out of Asia. They're the ones that have got the money. They're the ones that are really we're going to be pushing a lot more product to, and that's going to lift commodity prices, but also keep the Kiwi dollar high.
Meantime, Russia is opening up its grain trade again now to the rest of the world. What are the implications there?
Well, usually you'd say that the implications would be quite massive, and we have, of course, over the past couple of days seen grain prices drop in response to that announcement. But with the ongoing issues with dryness around the world, then I think the level of product that's going to come onto the market is probably going to be a bit muted, to be honest, because the UN's been saying that they really needed to have a bumper crop in Europe to really get things going. And there's big issues with the dryness in the European continent at the moment. So, while we're going to see a drop in production probably from some of those areas, then we may just top it up a little bit with what's coming out of Russia.
Okay, very quickly, wool prices, they're looking strong, but you're nervous because of cotton. Tell me more.
Well, to be honest, the last couple of weeks, the last couple of months, to be honest, we've seen cotton prices fall by, well over 20%, 25% on the US market. And just in the past couple of weeks, there's been, talk that, we're seeing some of the big orders out of China, for instance, that have been cancelled. And that's really put some shivers through US market. So that's making me nervous, but the outlook for wool and the commentary I'm seeing is relatively positive. So it'll be an interesting dynamic to watch.
Thanks, James. Coming up after the break, the New Zealand dollar has been the global superstar in the last week, hitting the highest level since it was floated in 1985. And the Chinese, US, and European global investment giants are checking us out big time, buying up New Zealand, boom or bust. A buoyant outlook for lamb prices, thanks to a number of economic trends in world markets. And the Australian economy looks likely to shrink, led by a big slump in mining profits. What's it going to mean for us, the Kiwi cousins? That's all ahead. According to a recent MYOB Business Monitor survey, less than a quarter of Kiwi businesses expect the economy to recover in the next 12 months. So as we head to break, answer this in our Farmers' Facts and Figures quiz. What percentage of the rural sector expects an economic recovery inside a year? Find out when we return. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, what percentage of the rural sector expects an economic recovery inside a year? The answer, just 15% of the rural sector is picking an economic recovery in the next 12 months. Well, we've all had a few days now to digest John Key's new budget, and as expected, the Christchurch earthquake dominates the fiscal and economic outlook. Joining us now is an economist by training, Murray Weatherston of Financial Focus. He's a financial advisor with more than 30 years of experience in business economics, finance and investments, and a former chief economist for the BNZ. Murray, no pressure now, but what did you make of the budget?
Well, I think it was pretty much easy as it goes. It could have been much harder because basically the government was facing a position where they were spending $4 for every $3 they got in. You know, they have a $15–16 billion deficit, which is not, a small change. And really, I think the description of it as being pretty much a nip and tuck budget in the short term is pretty appropriate.
Was there any point in even bothering? I mean, we all know that we're really going to get hammered after they go back into office in 6 months' time, if that happens.
Well, I mean, one of the things about the budgets is it's all pretty well foreshadowed beforehand. The media's really worked over and fed all the information.
Absolutely, they float all those balloons.
So when it actually comes out, it's sort of like, oh, well, that's exactly what we expected. There really wasn't much in it except for this, trend going forwards where they think the debt's going to come down, not really because they're going to attack expenditure. The budget certainly didn't attack expenditure, but more that as the economy recovered, tax take's expected to go up about 30% over the next 3 or 4 years, and so you end up with the gap between income and expenditure narrowing. Because of income going up, not because expenditure's going down. And I think a lot of people would actually like to see government expenditure being cut quite massively. I mean, what they're announcing at the moment, yesterday they announced that they're going to come for $1 billion over 4 years. I mean, that's $250 million a year. Their spending's about $70 billion. It's points of a percent that's changing, and there'll be plenty of businesses around like farmers and other businesses that have faced things where they've probably had to cut expenditure by 5 or 10%, perhaps even more at some stage. And really you'd think that what the government's doing is just really fiddling in it.
Yeah, they seem to be. James, what's your take on it? They're going to merge now five Crown entities, if you like, but overall they're talking about losing very few jobs from the public sector.
Well, I mean, I guess it's good that they're going to trim some cost out of it. But I guess the question, going back to Murray's point, is that enough? And it's just playing around the edges. So there's probably a proportion of people that want to see bigger, tougher cuts to see a few changes and to really get into those deficits. And a lot of the budget is, it's based on the fact that we're going to see the economy growing, we're going to see bigger tax take, and the question is whether that's going to happen in the short term and whether we obviously haven't seen it over the past 12 months, which has been a big issue where we're sitting right now. So we really need to get things going in order to make sure that we hit those targets by 2014-15.
Now, ETS is rearing its ugly head again for farmers. Labor has come out and said that they want to bring farmers into ETS, into the scheme by 2013, not 2015, as the national government has promised. What do you make of that?
Well, I mean, it's an interesting call because they've really drawn a line in the sand and, the farmers are not going to like this at all, and they've got every reason to, because the ETS, the way it's structured right now, it does have some severe implications for farmers, and it's not structured in a great way. So I do really question where they're going with this, and real political games, I think.
You say severe effects. How severe?
Well, for an average dairy farmer, it's going to cost around $12,000. For an average sheep and beef farmer, around $4,000. But the farmers are already paying for this in some ways at the moment through their electricity bill, through their fuel bill, those sorts of things. That's going to ramp up over the next couple of years. But right now, in 2015, when agriculture does come into it, then the problem is that farmers just don't have the technology right now to deal with it, and they don't really know how they're going to deal with it, because they're just going to get lower prices at the processor, as opposed to seeing a step change in the way that they manage their farm in order to reduce their emissions.
Murray, isn't this just all about really farmers whining again about having to pay for byproducts that they're producing?
Well, that's right. I mean, any time someone gets hit with a tax that they didn't previously have, they get really concerned. I mean, I don't actually see the rationale for excluding any industry from the ETS. If we have to have an ETS, and personally, I don't understand all the science of it, obviously, but I think New Zealand's one of the few countries in the world that's got an ETS. I mean, I never understood why New Zealand wants to punch above its weight, so to speak, by leading the world on everything. If I was in charge, the ETS would be abolished. Let's
move to that very high Kiwi dollar. Is it time for Alan Bollard and the Reserve Bank to intervene? James?
Well, I don't think so. I mean, we're kind of at a point where there's some reason behind why the Kiwi dollar is high, and we've also seen, just a couple of months ago, the Reserve Bank sent, provided a research note on why the Kiwi, some of the fundamentals behind the Kiwi, our high terms of trade, why commodity prices are high, and that's going to really underpin the Kiwi dollar over the sort of medium term, and that's probably our view also. There would be, I think, there's quite risks involved in the Reserve Bank stepping in now, because the question mark is whether really the Kiwi dollar is overvalued at the moment.
Murray, what's your take on it? Is this something that we all just have to get used to now, that this is the way it's going to be in future?
Absolutely. Absolutely. We have a floating exchange rate. The exchange rate is a price. Its price changes every second of every day, depending on what happens. If the world likes risk, our dollar goes up. If the world doesn't like risk, our dollar goes down. We basically can't do much about it. I think one of the interesting things is, again, despite the fact that we're a pretty small country in the world stage, we're about the 5th or 6th highest traded currency in the world, and you have to wonder why that is. I think there's one thing that hasn't been mentioned so far in terms of why the dollar might be high, and I think it could well be something to do with the reinsurance proceeds of the Canterbury earthquake. So the Earthquake Commission has got reinsurance offshore, the local insurance company's got reinsurance offshore. Those offshore people, reinsurers, must be having to buy New Zealand dollars to pay the claims. And I think the whole story is really a capital account story. It's aided in the short run by the terms of trade and the commodity prices. I still think it's a capital account thing, and basically nobody's really talking about what those flows are. If it really is a capital account story, the dollar could drop just as fast as it's risen, because if there's, say, $10 billion, for example, that the reinsurers are having to get into New Zealand, as soon as you remove that demand for New Zealand dollars, suddenly it goes the opposite way.
Let's look across the ditch now, and apparently their economy is not doing as well as they expected because of bad weather conditions. Now, mining exports are way down. Tell me more, James.
Well, I mean, in essence, Australia's been in a pretty tough situation, just like we have. With the New Zealand economy has been affected by the Christchurch earthquake in February. Of course, we saw Cyclone Yasi rip through Queensland, having a massive effect on their economy. So, today they actually released their GDP results, and the big pick is that they were going to see a contraction in the Australian economy, which is pretty unusual because they've been steaming along. The last.
It's a big surprise, isn't it?
It's a big surprise, but it's going to be a short term. It's going to be a short-term surprise, I think. They're probably behind that. The miners haven't been able. They've dug the coal out of the ground, but they haven't got it offshore. So.
They can't, yeah, because of the flooding. Murray, interesting question. Would you rather be a farmer faced with flooding or faced with an earthquake?
I would sooner be faced with flooding.
Why?
Flooding, the water disappears, relatively quickly. You take the earthquake, and Canterbury would be a good example. Japan would be another. It will be years, and it's not like 1 year or 2 years. I think it's more like 5, 10 or 15 years before things come right. So if I was a farmer and had a choice, I had to have a disaster. Give me the flood every day over the severe earthquake.
Okay, those two magical words, Chinese investment. John Key's been talking about it quite a bit lately, saying, in effect, he doesn't care where money comes from to buy up stuff here in New Zealand. Could be Chinese money, could be American, doesn't matter as long as money's coming in. What do you think, Murray?
Yeah, I don't think it actually matters who owns it either. I think there might be a difference between businesses that have intellectual property or manufacturing capacity in New Zealand. If foreigners come in and buy that IP and take it offshore, then it's lost forever. But frankly, if a foreigner comes in and buys a farm, the farm and the livestock still remain in New Zealand. The business is still actually in New Zealand. And I'm with John Key. I don't think it really matters who owns them.
Wow. What do you think, James?
Well, I mean, if you're borrowing $300 million or $350 million a week, then who cares where the money comes? We need it. So. Yeah,
we need it desperately, and that's never going to change.
So I think that's probably behind that comment. But I'd really question. It's no problem for Chinese money to be coming in to buy government debt, because we really do need it. But buying quite vital assets here in New Zealand, then that's a big question, and one that I'm not so sure that we're ready to tackle and we're ready to chew off at the moment. Particularly farming assets and milk processors, some of the quite crucial things that we're really not going to take the true value of the product that we're producing here. It's going to be shipped offshore.
Now, meantime, over in Montreal, Canada, my native land, a big meeting of all the power players in the fertilizer industry from around the world. Indian farmers are saying, we're poor, we're subsistence, we can't afford to pay the high prices for potash, for example. You got to give us a special deal. The association is saying, no way, everybody gets the same deal. What's going to happen there? Are we going to see more of this going on?
Well, we're in a global market, and if you want to play in the global market, you've got to take global prices, in my opinion. So,
but do they have to? I mean, we're talking about what, 600 million farmers? Don't they have some clout? What if they simply stop buying?
It's supply and demand. That's what a global market is. It's supply and demand. If supply is far greater than demand, price will go down, and if demand's greater than supply, price will go up. And if you want to play in the space, you just have to pay the price.
So what can farmers here expect? It sounds like prices are going up. In fact, I ran into somebody who works with Balance, and they were saying that their prices went up today.
Well, I mean, I think, what we're seeing overseas, agriculture, there's huge demand for food products, agricultural supply is down. Everyone's trying to make some incremental gains. The way to do that is through fertiliser. So fertiliser demand has got to be rising, and if that happens, then prices have to rise. So I think farmers have to be prepared that we are going to see some rising prices.
Unless there's more supply comes on from somewhere.
Definitely.
And it's exactly the same with the oil price. If you go back to your Indian farmer, I can't afford to pay for the fertiliser. It's exactly the same issue with oil. Supply and demand drives the oil price up. If you want the oil, you've got to pay for it.
Meantime, around the world, we're seeing a lot of changing weather patterns, and that's really playing havoc. Let's look at Russia, for example. They now say they're going to start re-exporting their grain to the world. But guess what? A lot of countries are really nervous, and they don't really trust them. And I don't think they're going to be buying huge lots. Is that unrealistic, do you think?
Unrealistic in terms of,
waiting to see, not really trusting the supplier.
Well, I mean, what we have to remember is that Russia is sort of the third largest, grain exporter, prior to last year. So they've got some clout, and if there's going to be some issues around the world in terms of supply because of dry conditions, then you don't have too many options. But
meantime, in Northern Europe, for example, France is having a terrible time. They're also huge wheat exporters. It's not looking too good there. What can we expect over the next few months, do you think, for the price of cereal around the world?
Well, I think we're at quite a critical time at the moment because you know the US market's is at a difficult point where they're seeing some dry conditions, but they can still get by. I mean, here in New Zealand, then you know we had several areas of New Zealand that were deemed to be drought just before Christmas. All of a sudden, we've got dairy production that's been up, you know, because of more rain and a better end to the season. So we could still see that. I think we're going to see some quite severe volatility over the next couple of months, particularly in the grain market.
Fonterra, of course, has announced a sensational payout, and it's looking good for next year. What can you tell me?
Well, I mean, this is the highest payout forecast at the beginning of the season ever. So I think that's really that is great news.
Is that true in real terms?
Well, perhaps not in real terms, but you know, it's pretty strong. I mean, the last highest was sort of, you know, was a bit lower than this. So you know, it is good news, and you know, I think that is a pretty good indication of where things are going. Okay,
gentlemen, thank you very much. Stand by. Coming up after the break, future proof, what our experts will be assessing and analyzing over the next 7 days. Wherever they're headed, you should probably be riding shotgun. But first, a question for you in our Farmers Facts and Figures quiz. How much has Esprit's net profit for 2010-11 plummeted, partly because of the funding of the fight against the orchard disease, PSA? The answer when we come back. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, how much has Esprit's net profit for 2010-11 plummeted, partly because of funding the fight against the orchard disease, PSA? The answer, Esprit's net profit has fallen from $26 million to $7.3 million. And now it's time for Future Proof. What's coming up that our experts will be watching? Murray, I wonder if you've bought a dairy farm like Sir Michael Fay. He's apparently put out, what, $9 million to buy something near Taupo.
That's right. Well, I'd be a bit interested to hear James's view on whether he, as probably a non-New Zealand tax resident, should be allowed to buy a farm.
That's a good point. Did he have to go to the OIO?
And, I mean, basically, if he's got some money and he's looking for it, I mean, I thought when I did some work with big animal vets at a conference years ago, I thought a dairy farm was the ultimate superannuation scheme. If you owned the farm, you got 50% of the milk check, you had to pay for the fertiliser. What a great superannuation scheme it was. Unfortunately, I didn't do it. But, I mean, the reason Michael Fay would have bought one would be because he thought it was a good deal.
Do you think it's a good deal in the current climate?
What, to buy a dairy farm?
Yeah, to buy a dairy farm.
Well, effectively, if you want to buy a manufacturing asset, because that's the way I actually look at cows, they're like, you know, manufacturing assets. You put, farmers will hate me for saying this, I guess, but you put grass in one end and take milk out another end.
Other things come out the other end.
Other things come out. But basically, it's a production process, and if you can buy the farm cheap enough, and the world price stays up, then and you're after making money, well, why wouldn't you do it?
Meantime, James, I know you're going to be checking out those lamb prices. They continue to be exceptionally buoyant.
Yeah, well, I mean, we talk about dairy payout being at $7.50. You know, sheep farmers are actually getting well over $7, in some cases getting upwards of you know, close to the $7.50. So you know, that's the market is looking really good at the moment, and you know, I guess the question is going to be if that's sustainable going forward. And right now, the indications from the market are that it is. And
UK markets apparently have finally figured out that they've got to drop their cut on the stuff so they can sell more. Is this a trend that's likely to help New Zealand farmers?
Well, I mean, the couple of key points here, UK consumption is down, but supply is down by more, so that's what's really driving the market at the moment. And because UK supply is down, then it means that, you know, they have to get their supply from somewhere, and the New Zealand product is getting boosted, and we're starting to get more and more of the returns out of the supermarket, which is good news. If we can sustain that going forward, then that you know, might be quite a change in the market.
I think a store lamb now is making, what, something like $102. A few years back, it was like $36. What's the long-term trend, do you think, for lamb prices?
Well, I question, what's going to happen when supply does come back on board because, if we look at some of the big markets, then red meat consumption has been dropping. If you look at beef in the US, look at lamb in the UK, it has been dropping. So the big question in my mind is putting that into some developing markets and really facilitating that going forward. So if we do see supply come back on board over the next, say, 3 years, because I don't think that's going to change over the next 2 to 3 years, which will be good for prices, but the question will be 3 years out.
Murray, in 30 seconds or less, what are you watching over the next week?
Well, I think it's going to be fascinating seeing the announcements coming out of the government about some more minor moves that they're doing for cuts. And what I expect them to do is always to round it up. So it'll be 4 years of cuts, $1 billion over 4 years. It's going to be a whole pile of small change, but it'll be interesting to see where the small change is.
Great. And how about you, James? What are you watching over the next 7 days?
Well, today we've got the Australian GDP numbers. We've climbed against the Aussie. We could climb higher if those are really weak.
Okay, watch this space. Gentlemen, thank you so much. Thanks to my guests, ASB rural economist James Shortall and Murray Weatherston of Financial Focus. We love to hear your feedback, so be sure to check out the website. And the next time you hit the back 40 or the office, thinking it's just another day, be alert. You never know what awaits you. Keep the faith. See you next time.